All right, welcome to Coffee with Marcus and Morgan. In this show, we are going to talk to you about what's happening in the markets and how we are trading it. Today is Monday, August 29th, and wow, on Friday, Fed Chief Powell causes a brutal sell-off in the markets. The Dow crashes more than 1,000 points. The worst day since May 18th, and all of August gains were erased in one day. So will it continue this week? Because this week's focus, our August jobs report, will take a look at this. And there's important technical support levels for the S&P 500. So we'll take a look at this. Plus, we'll show you our current positions and how we are trading these crazy markets. As you can see, there's a lot to talk about. So we are getting started right away. But before we do, if this is your first time here, hi, I'm Markus Heitkoetter. That super smart guy over there is my head coach, Markus. And we're real traders who trade live accounts. And we got a ton of trading experience. And we're showing you how we trade these crazy markets. So we know our stuff. We have been trading for a long time. And we are not afraid to tell you like it is. And if you're looking for some honest insights to the fascinating world of trading, you are in the right place. Now, talking about real traders, real money, real pain on Friday. Wow, what a day! What a day! I mean, here we see Friday, and if you switch to a 5-minute chart of the S&P up here, there we go. Let's talk about this, Mark.
Yeah, it was brutal, Marcus. I mean, we were doing the show on a Friday, and it looked like there was some indecision there, and maybe down a little bit. But after hour later, we were at session lows and just continuing on throughout the session and down 3%. It was a bloodbath.
Yeah, and I mean, this is where the S&P was down 3%, the Nasdaq was down 4%. So what caused it? Well, we see here this little bit blip. Fed Chief Powell was talking for only 8 minutes and managed to erase all of August gains in these 8 minutes.
Yeah, it looked like the initial response was, and reading into what he said at first, it seemed like it was restating what he's already said, that the Fed is committed to raising rates and doing what it needs to do in order to combat inflation. You have that headline there. He warned of some pain, and I saw there was a quote saying restoring price stability will take some time and requires using our tools forcefully to bring demand and supply into better balance. Reducing inflation is likely to require a sustained period of below trend growth. So I think that once traders really had an opportunity to digest that information, and also you see all the headlines like some pain, there was some fear in the market.
Yeah, but honestly, and we talked about this with our mastermind members a little bit earlier, I think this was an overreaction. Like, okay, wait, what did he say? Is this really bad? Or has he reiterated what he already said? And then if you also look at the probabilities for the next rate hike, I mean, they went up a little bit because over the last week before Powell's meeting, it was 50-50 for a half a percentage hike and another 50% for a 3/4% hike. So right now, slightly higher, but still no certainty. I mean, if he would have said, oh yeah, we are using the tools forcefully, then traders would have factored in, oh, he just said it will be 3/4 of a point. But that's not what traders are factoring in right now.
Well, but there has been a little bit of a shift, right? Because at the beginning of August, the 3/4 point hike was at 28%. So everybody basically felt that 50 basis points was on the table. Then it was about 50-50, like you said. It's not factoring in certainty that they'll come in with a 75 basis point hike, but definitely leading the way right now after the comments there. But part
I
of it
think this year is more telling because this is where we see, okay, what are traders factoring in? When or how much more will the Fed raise interest rates? And now it seems to certain that they will land between 3.75 and 4 and are not lowering interest rates for at least a year. And I believe that when we looked last at it a few weeks ago, the traders were factoring in a probability that the Fed might actually lower interest rates within a year's time frame.
Yes, that was on the table, and that's kind of what traders are really concerned about or want to know how aggressive the Fed will be with future rate hikes, but also how things look in the future. and now you see that it's pretty stable. I believe it also went up a tick into that 375 400 range. I think it might have been a quarter point below, but it seems like traders are anticipating peaking there, but staying at that level and in that range. That's higher. Remember that the Fed kind of shoots for 2% for interest rates over time, so that's double.
Right. So they're way right now going above their target between what 2.5% of almost doubling it to get inflation under control. So this we're going back to charts and seeing what happens today. I mean, let's take a look at overnight trading, and we will take a look at the mini Nasdaq. And in overnight trading, well, at first we were trading lower, right, and then looked like we were trading higher, and there was some indecision. Going into the open, we were actually pulling higher, and at some point this morning, the Nasdaq was actually positive, but this quickly has changed.
Yeah, finding an overnight range, and futures markets open Sunday evening, and it's 6 p.m. Eastern, 3:30 on the West Coast, and so we did open lower, finding that range, rallying into the open, you could say, and pulling back. Still, just kind of indecisive. I know that we're down, but really just trading around where we opened up right now.
Right. So this is where we need to see. I mean, right now there's a little bit of hangover from Friday, but it doesn't seem thus far that this massive sell-off will continue. And we need to take a look at two technical levels that we have in the S&P 500 here. The first one is if we are looking of how much we retraced from the high that we made here in the beginning of the year to these lows, then we see that right now, no, that's not what I wanted to look at. Now I know. When we moved higher here, wanted to look at the fib retracement. So that's where the low is, that's where the high is, and we see that we have the 0.5 retracement level right here, just shy of 4,000, 3,990. So we talked about the 4,100 level. This would be healthy. We had to touch this. We broke through this. So where's the next stop right now? So 3,990, just shy of 4,000, especially with the round number, seems to be the next target here.
I would say so. I mean, you have this confluence of possible support. You have round number support at 4,000. That's going to be in the mind of traders. And then you also have a fib level, but you also just have classic, chart analysis and chart reading and 50% pullbacks. I mean, that's within reason. If it gets below 50%, then we might be tackling the June lows.
Right. We also have the 50-day moving average here, and we'll see if the 50-day moving average holds, because this is also just around the 4,000 mark. So there's lots of technical support at the 4,000 mark that could hold up the S&P. So not too surprised that we are moving a little bit lower today, but I also wouldn't be surprised if we are moving higher and bouncing back here later this week, especially since we have the last couple of days of August here, and then we're going into September, and September is usually a pretty strong month.
Well, we also have not to discount what you just said, but we're headed into a holiday weekend too. So it could be that there's a little bit of a let's take some money off the table and then reassess in September. So yeah, I think we might not be out of the woods right now, but maybe drifting higher, and then after the holiday, a better feel for where traders want to put money.
Yeah. And so it seems that we are coming out of the quiet period, because this week it seems that the Fed members are super active. Today, Fed member Bernard is speaking. Tomorrow, Fed member Williams. Then we have Fed member Mester speaking on Wednesday. So we have a lot of the Fed members here weighing in and basically giving their take on what Powell said on Friday.
Yeah, and there could always be a wild card or nugget here and there that traders might decide to focus on and grab hold of. Economic report-wise, the biggie's going to be on Friday.
Right, because that's where we have the jobs report. And this is where we already learned from Powell that he says, well, I'm okay with a softer jobs market. Right now, it is expected that we are holding the unemployment rate at 3.5%, but I wouldn't be too surprised if this creeps up to 3.6, 3.7, maybe even 3.8 over the next few reports.
You'd think.
Yeah, that's I think what Powell wants to see, because he wants to also make sure that the average hourly earnings, that they are not increasing that much, because that would just contribute to the downward spiral here of inflation, right? When we get higher unemployment reports. Anyhow, days like this, Friday and today, are shopping days, because as you can see, there's a lot on the scanner. And so I want to talk about two things. And the first is, if you see a lot of symbols popping up there and you have 43, how can you narrow it down to just a few symbols to look at first and then add on? And then we'll also talk about the positions that we are in here right now. But this is where we have the filters. And I mean, if we go to the default filters, that will already usually get it down to here right now we have 27 symbols, so that's good. But I think one of the most important filters here right now is the minimum strike price. So let me just explain. If you look, for example, at AMAT, we see that the lowest low indicator, which is the blue line, is at 86, but the minimum strike price is at 91. And Mark, we like to trade stocks where the minimum strike price is at or below the lowest indicator. That's why we always, or often when we go through this, we say too high, too high, too high. Here, for example, KLAC, right? The strike price is too high. We would be way more interested in the 310 or 300.
Sure. Generally speaking, that's a good rule of thumb. We might use some discretion at times if it's a stock that we really like and go a little bit above. But I would say that, yeah, 80, 90% of the time at the lowest low or below gives us a good strike to be trading.
Right. And so this is where right now we have 27 in there. And when we use this filter and we say we only want to see stocks that are trading at or below the lowest indicator and support, this right now gets it down to 8. Significantly, so much, much, much better. And this is where we see companies, for example, like FedEx popping up at a strike price of 205. That's not bad, right? We have MU, Micron Technology, for around 53. The one that we like, NVIDIA, around 144. We talked about Blackstone and COF earlier this morning. So also they look good. So this makes it much, much, much more manageable.
Sure, especially when there are dozens of symbols popping up.
Right. And so this is where you can start with, and you could even say you don't want to do at, you just want to do below. This will pare it even more down, so to only 7 stocks. And you can start looking at these. Then you can increase this at or below. And then if you want, you can go ahead and expand it to all strikes when you have the 29. But this is a very systematic way of very quickly to finding the best stocks or the best options to trade here for the wheel strategy that we like to trade.
Exactly. And we like to sell strikes at these levels, at a support level, because it gives us protection, right? If the stock does pull back, it is possible that we get a sign. But if that's where buyers are stepping in, then we could get a sign and then see the stock rally again. Just gives us a little more protection rather than selling strikes and just seeing the stock continue to slide where now we own shares and it's harder to sell calls.
Right. And what we also like to see that, like here with COF, that the support level has been touched multiple times. So that makes it more significant. So a few times COF traded down to the level of 102 and then bounced right back up. So that's what we like to see. It's usually not very good if you just had one touch and then it came back, but this here shows some very solid support.
Yes.
Okay. Well, we went on a shopping spree, right? I mean, we sold puts last Friday because there were just plenty of opportunities. So I'm still in, let's just move over to the watch list. So I'm still in TPR that expired worthless, got a sign at 37. Today, a little bit all over the place, lower. So right now I cannot sell calls, but over the past few weeks, as you can see, this was fun selling calls. Also, NVIDIA, well, dropping almost 10% on Friday, a little bit more today. So right now I will not be able to sell calls. I need to wait until we're probably popping back to around 180, I would say, before I can sell calls. And for you, that would be AMD, correct?
Yeah. Semi's getting hit a little bit last 2 days.
Yeah.
Well, last
So,
couple of days.
well, see, and this is why it is so important, right? I mean, only trade stocks that you are okay having in your portfolio. And Mark, you're okay having AMD in your portfolio. I'm okay having NVIDIA in your portfolio. Then last week, I already traded Macy's. I sold the 17 strike. So that's going well. Right now, trading at close to 18. So we'll see where we are on Friday. This expires on Friday. And then we found several opportunities. Barrick Gold, we actually liked that at a strike price of 15. Let's just get rid of the volume here. We also found Google really, really nice here at 105, popping up this morning. And also United Airlines at 35. So several stocks that have some solid support. So you can see United could actually dip as low as 34 before bouncing back. But that's why we are looking at closing prices and not what stocks do intraday.
Yeah, and bottom line, Friday, I know some traders were panicking, and we were having fun.
We were definitely having fun. I mean, this was like, oh my God, there's a lot going on. Now, a few things that I just want to show right now. This morning, for example, PFE popped up on the scanner again. And I've been trading PFE. Did you trade it as well, or was it just me? I think it was just me, right?
I think I got in at the 47 a while back.
Okay, yeah. So we looked at the 47 as solid support, and just because we traded it once doesn't mean that we are trading it again. Because right now it seems that the 47 seems to be broken. This morning we have been trading as low as where were we? 46.12. So I think this is where it's important, because sometimes people ask us, well, can you give us a watch list of the stocks that you're trading? Well, our watch list is what is popping up on the scanner, right? And we are looking at everyday new, because a stock that actually did look good maybe last week or a few weeks ago might not be a great candidate right now.
Absolutely. We're reassessing things as though it's a new trade, and that's exactly what it would be, right? We don't need to have a bias and just say, oh, we want to trade it because we traded it before. Marcus, I know it goes back a little bit, but Dick's Sporting Goods was an example, DKS, the ticker, where we did trade this a couple of times, but then just analyzing the chart and how it started to get a little bottom heavy, it was testing that support level and the volatility. We decided, you know what, we don't want to trade it. And we weren't part of that 40% drop that occurred. It did come back, but why trade something like that just because you traded it before when there are easier and better tickers?
Yeah. And since Friday was shopping day, I mean, we had basically the choice between Google and also, I mean, there were other great stocks popping up. Microsoft also at some port level. But if you look at the charts of these two, we liked it better that Google found some more support. I mean, Microsoft right now, if you would like to have it in a portfolio for $255 and go bargain shopping, sure, sell the put here right now. But just because it is a value stock here, we liked Google actually better because we saw more solid support right here, and that's where we decided to sell puts.
I loved it.
Yeah. Let me just ask you before we move on, is this helpful at all as we are going through this and show you a little bit, take you behind the scenes, show you a little bit how we are thinking when we are looking at the stocks, how to use the filter, and how to actually, go in a systematic way of finding the best stocks to trade? If it is, give us a like and let us know that you're enjoying this. All right. Did we have anything else that we wanted to talk about? Let's see what the markets are doing here right now. So switching to a 5-minute chart. Yeah. I mean, again, markets open lower, pulled higher, pulled lower. They're diddling around here. At first, I thought that markets would finish positive today. I believe that today they might actually finish lower, but probably for the S&P, I would say less than 1%. That's my
Yeah, I'm with you. Hey, one last thing. Tesla popping up on the scanner.
Oh,
do you like it, Marcus?
my gosh. Let's take a look at this. Yeah, Tesla popped up. Let's bring it up here. Because now after the stock split, it is definitely lower. Well, here's the deal. It's popping up with a strike price of 260. For me, that would be too high. I mean, looking at the lowest close, I would be way more comfortable selling puts for 210, maybe going up to 220. That would be okay, but definitely way lower. What do you think?
I absolutely agree, and I think it's just a perfect example of the lowest close indicator because visually, if it's more challenging for you to see support and recognize that support level, because I agree, 210 looks awesome, 220 possibly, but if it's hard for you to see that, the software does the job for you.
Yeah. And again, use this as a rule of thumb and as a visual aid. This is not a law. That's why we say, well, here the lowest low indicator has been at 209.50. Here it has been at 213. Here has been at 224. I mean, it's almost like take a big marker, put the marker through there, and then you have a solid support line at around, as we said, 220, 215.
Yeah,
Yeah. Good
something to
point.
watch.
Yeah, there's a lot going on. Hey, if you're new to this wheel strategy and would like to learn more of how this works, I'll link to a video right here. Take a look at this one, and if you found it helpful, give us a like, and then we'll see you again tomorrow morning.
Happy trading, everybody.